I'm really happy to be able to share with everyone that we have been successfully working remotely since mid-March. We made substantial investments in our IT infrastructure and our backup systems. So we've been able to work really without skipping a beat for the balance of this year, and it's been under some pretty extreme circumstances. What we do is look for businesses that have inherently stable values. We are value investors, but we do not look for cheap stocks. We look for businesses that have inherently stable values, and we wait for them to become discounted. Most of the companies that we follow are overvalued most of the time, but when you have an event like COVID-19, when there is stock price volatility, we can take advantage of it because our values are stable while stock prices are not. In March, we had bad performance like everybody did, and that was okay because that set the stage for future compounding. We were able to buy some amazing businesses at deep discounts, and we followed our philosophy, and that is by limiting ourselves to companies with inherently stable values. When we had downward stock price volatility, particularly in March, we were able to buy some amazing businesses at incredibly attractive prices, and that combination has set the stage for what we think will be very good prospective returns over the next 5 years. When the COVID-19 crisis really took off in March, we stress tested all of our businesses, and we found that the vast majority of them would be fine and could withstand a truly terrible global financial crisis. However, there was one business that we did sell because its value became unstable. We sold Airbus. Coming into 2020, Airbus had a 8-year backlog for new jets. They had 8 billion euros of net cash on their balance sheet, and they were producing a very large multi-billion euro free cash flow coupon. Our value was growing nicely, and they had the upper hand in a global duopoly with Boeing because of some mistakes that Boeing had made. However, when the crisis hit, we talked to a number of airline executives, and they told us that they just simply weren't going to take the planes. And Airbus was left with some very difficult decisions. And you went through various scenarios, and there is a scenario where Airbus does okay, but there are some other scenarios where Airbus doesn't. And we just simply don't have to take that risk. We have bought 3 new businesses this year, and they are Skyworks, Carlyle Group, and TransDigm. Skyworks makes RF systems. They're one of the leading makers of RF systems in the world, and RF systems are used to power a lot of the devices that we're all using during the pandemic. Carlyle Group is a private equity company whose short-term earnings are going to be impacted by this, but whose long-term earnings power is actually going to benefit from this because they're going to have more opportunities to deploy a tremendous amount of unspent capital. So their value is very stable, and they're going to benefit on the other side of this. And the last company I want to talk about is TransDigm, which is an aerospace company, and you might be asking yourself, why would you sell Airbus, one aerospace company, and then turn right back around and buy another one? Well, their business models are very different. Airbus makes money by selling new jets, and they make very little money by selling aftermarket parts. TransDigm is the opposite. They make no money selling new jets. They make a little bit of money selling new parts for jets as they're being built, but where they really make money is in the aftermarket. And their revenue streams are really tied to revenue passenger miles. So TransDigm's revenues are down, their free cash flow is down, but they're still generating free cash flow. and they're going to rebound really quickly once we get to the other side of this and we have a vaccine available. We are fairly pessimistic about the short run. It's very possible that we could have another pullback in the economy, that we could have some bumps along the way before we have a viable vaccine. Looking out a little further, there's a lot of encouraging news on the vaccine front, and we think that by the end of 21, things will be very much back to normal, and we think that 22 is going to be a really fantastic year. So, but there will be bumps along the way between here and there. So we would just urge everyone to, for your own personal benefit, to be safe and cautious and practice best practices and keep your family safe and healthy. Now, every single company that we own has very strong prospects, and we're expecting double-digit compounding from every one of them. But the two at the moment that are the highest are TransDigm and Amazon, and for different reasons. Both companies can grow, but Amazon will grow a lot faster than TransDigm. Our returns are a function of the price we pay compared to the company's value, and then how fast the value grows. Amazon's value should grow faster than TransDigm's, but it's not as discounted. TransDigm's value is more attractive than Amazon's, but it can't grow as fast. But when you take the combination of those two things, both companies offer our highest prospective returns over the next 5 years. You know, if we were concerned about any of our stocks, we wouldn't own them. We would just sell them. So the short answer to that question is that we're not concerned about any of them. If we were, we wouldn't own them. The only company that I can even mention, and we're not concerned about it, but it is the one that is enduring the most short-term pain right now because of COVID-19, is Hilton Hotels. Hilton Hotels is a fantastic business, and they will actually benefit and come out stronger on the other end of this. However, in the short run, obviously people are not traveling much at all, and their revenues and profits have collapsed, and they're going to generate negative free cash flow this year. However, Hilton has a very intelligently structured balance sheet. We think that they can weather the storm, and when we get through on the other side, we think there'll be a lot of pent-up demand for travel, and even more importantly, because of the severe hit that the industry's taken, even in the midst of this pandemic, Hilton's net unit growth, that is the number of new hotels entering their system, is actually still growing at an attractive rate, and we think it's going to accelerate and grow a lot faster when we come out on the other side of the crisis.